Okay, so we're back with same video, and now we're going to be explaining how this strategy works. We're already in profits of $23, but we hopefully these trends are gonna make it to about $1,000 per trend. So no worries, we're still here. Okay, now let's look at how this formula works. For example, we're going to be working with a crash 500. Yeah, let's work with crash 500. Most people have crash and bombs. Okay, so I'm going to start by putting everything or showing you how to install everything on the screen. Okay, let's start by going for function. You can ignore this fractal. Focus on these relative strength index, RSI, MACD, moving average, and Ichimoku. So number one, the relative index was RSI, relative strength index. The RSI, we implement it with the following parameters. Its period must be 14 here. It should be applied to close. You can take a screenshot, a quick screenshot of whatever is here. Then I will show you how to apply them. But take a screenshot. Then the style, you can make whatever you want, but I recommend 1 pixel. Then the levels, you can have right from 0, 5, 10, 15. You can take a screenshot, 20, 25, 30, then around 50, then 70, then 85, or 80 and 85, then 90 and 95. So the levels that you shouldn't miss out are 1, level 10, and level 90. These are the most important levels. Level 10, level 90, and level 85. So you can record around 4 levels. Level 15, 1, level 10, 2, level 85, and level 90 for RSI. So let's move on to, you can take a screenshot here. Later we shall come back and see how they are applied on the channel, on the screen. Let's look at MACD. MACD for the first EM, you can apply it to 12, make it around 12. And yeah, actually MACD, these ones are defaults. Leave them to defaults. It is applied to close. The main, you can choose any color you want, but main, make sure it's 1 pixel. You can make it 2 pixel, but just make sure it fits on the screen. 1 pixel is enough because we're going to be adding more things. You can make the signal 3 pixels. The rest here, the figures, the parameters are default. No levels and time frames. No time frames. So that one is done. Take a quick snapshot. I'm not repeating this, guys. I'm not repeating this. I'm giving out this for free for once and for all. Let's go for moving average, period 2, and shift 0 method exponential. Make sure it's exponential. Click there and choose exponential. Then apply it to the previous data, previous indicator data. Make sure it's applied to previous indicator data. The style, you can make it 4 pixels. You can make it what you want. Choose the color you want. No levels and no time frames. Take a quick screenshot because I'm not coming back here. Take a quick screenshot before we go down. Let's look at Ichimoku Kinko Hu. The first parameter is the Tenkan Sen. So the Tenkan Sen should be, actually Tenkan Sen is 9, Kijun Sen is 26, and Senko Span B is 52. You can just leave it to default. These are the default values for the Ichimoku. The style for the Tenkan Sen, you can make it 3 because we are most interested in the Tenkan Sen. That's why the rest of the Kijun Sen, up Kumo, and down Kumo, Chinko Span B are all, we are not interested in all these. That's why I'm putting them in black, which is my default background color. If your default background color is black, make sure these ones are black. If your default color is white, make sure the color here is white because we don't need these. We only need the Tenkan Sen. And make sure they are on the smallest pixel, which is 1 pixel, because we just need them to be in the background, faded in the background, no disturbances. We just don't need them. We need only the Tenkan-sen. That's why I'm giving it a pixel of 3, or I can even give it 4, but I give it 3, and a different distinct color from the background. These ones I'm giving the background color just so they fade in the background and they are not seen on the screen. We only want to see the Tenkan-sen, which is green. The values here, just like I said, remain to default 9, 20, 26, and second span B52. Take a quick screenshot before we move on. Take a quick screenshot and then we move on. So now we are done explaining. You can just ignore the fractal, it's not of use right now. Okay, so these are the 4 parameters that we are using, 4 indicators on the indicator window. So maybe you can just remove them and reapply them and show you how they are done. We said mark the defaults, everything. Then main 1 pixel, then signal, you can apply 3. Then you said moving average. Actually, moving average of 2 was enough. Yeah, 2 exponential. You can take a quick screenshot. Okay. Let's first remove this. Then Ichimoku, leave it to default. Then Mark D, leave it to default. And then change everything just like I told you. So we are now going to head over to how to apply them. Let's first delete them in the first place. Delete. You can remove all. So you can see the chart is now free, nothing is there. So we're going to be applying them. Wow, we are still in profits here. So let's apply our indicators. First of all, the RSI should come first. Click here and click on F. Click on F plus. Go to RSI, which is here, relative strength index. RSI, we said you can just leave it at 14. 14 will be enough. The pixel is that one. Maybe the levels, just like we said, apply 0, level 15, level 20, but I think just 15 is enough. You can just leave out the rest. Put level 0, level 10, and level 15, and then also add level. You can add level 30 and 70. Add level 85 and 90. This is how they add levels. Click on plus, then the 0 will come down here. Edit this in the 0, put any level you want. For example, let me put level 30. We already have level 30. You can put level 100, but though it's not there, this is just a demonstration. And then click, put another. If you're done, you click another plus, add another level. But as you can see, I'm not interested in level 100, so that's why I'm gonna be removing it. Okay, level 100 off. Okay, now hopefully you put your levels and click on done before you go. So now the relative strength indicator is now applied. You can see this is the relative indicator. This is the RSI line that goes like this, and these are the levels that we have. Just like I said, just put 15. You're most interested in level 15, level 10, level probably 30, and then level 70. Then another most important is level 85 and level 90. Okay, let's see, we still have time. Whoa, we're running out of time. Okay, I think I'll give you the rest in the next video, but let me just continue in any case you want to follow up. Okay, let's go on to another level, which is let's add another indicator, which is now Mark D. Still add it on this indicator window. While we added the RSI, let's add Mark D. We said Mark D, these values leave them by default and it's applied to close. Main, you can give it 1 pixel, signal 3 pixels, then you can change the colors according to what you want. No levels, no time frame. Click on done. That one is done. Now go to the indicator window again and add, click on the F plus, add the moving average. This is it, moving average here. We said you can leave it the way it is to zero exponential, but here on apply to, make sure you have it is applied to previous indicators data. The style, you can leave it wherever you want, whether it's 4 or 3 pixel, give it a color and say done. So now we have three relative strength indicator, RSI, MACD, and the moving average. So once you go back, you can see what we have so far. We're remaining with only one, who is the Ichimoku. Most people use it like this. Probably you may say that you've already seen this online, but most people have this, just this. And the problem with having this, and actually they have this without the RSI, the problem with having this without the Ichimoku and without the RSI is that you will always make losses or even go into big drawdowns. So to avoid that, because when it hits a level 90, we're supposed to sell. But sometimes the MACD hits on level 90 and continues buying. So who tells us that at that point we are turning? Number one, we can apply the candlestick formulas of engulfment and rejection, a weak formation, to tell that there is a rejection or there is an engulfment, and therefore the trend is changing, probably heading for a downtrend or uptrend for that case. But now that's one case, which is not actually in the case. Most people don't apply that again. I'm just giving it to you in addition to this. Always look for an engulfment. Or now, talking about engulfment, let me talk about it right now and then leave because I'm not coming back for it. For example, look at these two candles. These two candles here at the bottom. As our MACD hits the bottom, which is 10, so that's the buying signal actually. So look at what is happening to the prices in the market at that point. There is an engulfment in the candlestick. The next green candlestick is engulfed inside. Its body is engulfed inside, meaning that there is a change of trend from downtrend to an uptrend. Because this is where we have a signal on our MACD that we are supposed to buy, because the MACD hits 10, which is the lowest level on our chart. So that said, I'm done with engulfment. Probably I can talk about rejection of a week. Now this is a rejection of a week. Look at this. Here it shows that the candle has a very big wick, a very long wick, meaning that it has been rejected or actually rejected from going up and therefore changing into a downtrend, from an uptrend to downtrend. So if you look at the same point of rejection, look at our MACD, it hits level 85. So just like I said, there are two most important levels, 90 and 85. So that's where we have a turning point into a downtrend. So it's perfect. You can see at this point you have a turning point into a downtrend. So now I'm done with talking about engulfment and wicks, which are signs of course, rejection and turning into a trend reversing. Now let me continue on the next, adding the next indicator, which is the Ichimoku. Click on the screen, click on F again, click on F plus. We're going to add the Ichimoku indicator, which is this one here, which is the confirmer or the confirmatory indicator that really at that point we are turning, we are not moving any more further. Sorry. So just like we said, each Ichimoku parameters have to remain by default. Tenkan Sen 9, Kijun Sen 26, and second span bar 52. But take note that here we are only going to use the Tenkan Sen. So choose a good color and give it to Tenkan Sen. Make sure the colors are not the same. Make sure you can differentiate them on the screen. Give it a relatively bigger pixel than these ones. Then the Kijun Sen up comb, down comb, and Kijun span. We're not interested in these. We're not interested in these here. That's why we're giving them the color similar to the background. I'm using my phone, my graph, with a background of black or a dark background. That's why I'm giving them the same color and a small pixel such that they fade in the background, and I'm not using them, and they are not a distraction to the rest of the strategy. If your background, if your phone background or your graph background is white, make sure that these colors here are white. You just click on this and choose white. But mine is black, so I have to maintain them in black. If your background is white, make sure they're white. As simple as that. So click on done. I hope you took screenshots, so you'll be applying them just like I told you. Now go back to the chart. Now we have a full strategy. So next, I'm going to be talking about, I'm going to be talking about the entry points now. The most important thing, the entry points. When do we buy, when do we sell, when we not do anything. But most importantly, when we buy and when do we sell. So point number one, let me talk about the sales. At this point here, you can look at, you can see that the MACD, the moving average, and the Ichimoku are all above 85. Now, once you have the moving average and the MACD hitting 90, that's a sign of rejection. At that point, there will be rejection, and we shall be turning from that uptrend to a downtrend. But what confirms? Confirmatory number one, you will have the signal line of the MACD crossing the red line of the moving average. So this is a fast signal that we are moving down, the crossing of each other. This could probably be the most entry point preferably. But before entering, you must look at the confirmer, the green color, which is the Ichimoku. The Ichimoku must be relatively in the same area, probably or most preferably above 85 and above. So probably at this point where the Ichimoku hit 85, that was a confirmatory point because you had already had a MACD crossing a moving average. So that's the first confirmatory. The second confirmatory is the Ichimoku being at 85 or above 85. So those are the three confirmatory factors for you to enter into a concrete reverse. This was a very good downtrend. We entered at this point where the Ichimoku confirmed. We entered here, as you can see at this point, and we moved down all the way up to here. This was a lot of money. Remember, this is a 4-hour time interval. This is a 4-hour time interval. So you can imagine these are all 4-hour bars, 4-hour bars, 4-hour bars. This probably, if you entered here with $1, you could have made something like thousands and $10,000s of dollars from this trend. Okay, now that said, let's talk about the opposite, which is the buy signal. That was the sell signal. Let's talk about the buy signal. Now let's take an example of this point here where the MACD, the moving average, and the Ichimoku are almost hitting 5. It works perfect when all of them hit 10, but if they find themselves all the three in between 5, in between 10 and 15 at that point, 10, 15, around there, around this point, it's a buying signal. Once you have three of them around this point here, 10, 15, it's a buying signal, concrete buying signal. But just like the opposite I said, once the MACD hits there, you wait for it to, the signal line of the MACD, you wait for it to cross the red line of the moving average. Once it crosses, then you check on the Ichimoku. Is it in the relatively in the same area? For example, yes, the green line Ichimoku is there, actually at the same point. So that's a perfect a signal of a reversal, and you can see that in the candlestick we have some engulfment, and that is enough for us to enter an uptrend. So we entered an uptrend at that point. So you can imagine this is a 4-hour time interval, entering an uptrend at this point, and you move until this point. How much would you have made at this point? This is a lot of money, probably thousands and $10,000s of dollars. So those are the two main entry points. So you keep on looking out for those entry points. Like for example, this was another entry point here. Continue looking for those entry points. You backtest. Okay, we're looking for only perfect entry points. This was another perfect entry point here, down here for an uptrend. You can come over to, this was a good downtrend. though the Ichimoku was not as relatively far away, but at least in the same area. Another perfect downtrend was here, where we had all of them above 85. The Ichimoku, Tenken's, Ichimoku, the MACD, and the red moving average, all at the same point. So that's all, guys. This is how we use this perfect strategy to make money in all time intervals. So these guys are retracing, but hopefully they will be going back. So thank you for watching. I'll see you in the next video. Make sure to subscribe. Make sure you subscribe at the channel, because I will be bringing the robot that handles this. There's a robot where we put this strategy and it starts entering trends automatically. So if you subscribe to the channel, probably you will have a ticket at least to see the robot working. And if you join the channel, go ahead and click on the join button. You join the channel, you will be eligible to have the robot at least have signals from the robot for free every time, forever. All these signals from the robot, so you'll be entering them on your channel, on your trading for free. So make sure to subscribe, and if possible, join the channel. Please join the channel, because if you join the channel, you will have access to a lot of exclusive scripts, a lot of exclusive robots of all these strategies, and everything to do with trading. So thank you for watching. I'll see you in the next video.